All right. Today's Monday, the 11th of August, and this is a recap for the stock market activities today. And folks, I got a good one for you tonight. I hope everybody had a great weekend, but we have important stuff to talk about tonight because, it's really mind-boggling what's going on in this economy and the political sphere in this country right now. Supposedly, we have a conservative administration. Yet what we're getting is a toxic mix between authoritarianism and communism. And the best illustration for all of this is, of course, what's going on in the U.S. chip sector right now. Unbelievable stuff we've never seen before in the history of this country. So let's dive right into it, and we begin, of course, with the story of NVIDIA. It is the top exporter of AI chips, ahead of the game right now. And of course, when the Trump administration took over, our expectations were that the new administration will be tougher against China than the Biden's administration. And a reminder again, the Biden administration added some restrictions in chip exports to China because AI is a war, a technological war right now. And whoever sprints ahead, US or China or any other country, in the AI war will dominate the technology environment in the 21st century. So it is in our national interest to be ahead of China. And therefore, as expected, of course, the administration was tougher against China. And immediately we've seen that the Trump administration took a tough approach and pretty much added more restrictions to China's access to US AI chips. Of course, this did not jive pretty good with the Silicon Valley types and the Wall Streeters, because all what they care about is money and the now, getting rich right now. They don't care about national security. They don't care about anything. The future, that doesn't matter to them. So they were upset against the Trump administration for choking the access to the Chinese market. Matter of fact, the Bureau of Industry and Security from the U.S. Department of Commerce came out and said that they're going to strengthen chip-related export controls. Of course, the stock market did not react positively to all of these news because a lot of the revenue that these companies make come out of China. So there was pressure against the administration. And the question was, what will it take for the administration to re-allow access to the Chinese market by these artificial intelligence companies based in the US? And the answer, of course, we got it in the last couple of weeks, and it's pretty shocking that the price of admission is pretty much bribery. But one step at a time, folks. It is important to illustrate why is it important to restrict chip exports, specifically the AI chip exports to China. It's not because China's evil or China's bad. It's because China can outsmart us pretty easily. And China can kill us in terms of efficiency. Look at what happened with Tesla, for example. Tesla used to dominate the Chinese EV market. The Chinese welcome Tesla. You can come over here, you can open factories, you can sell cars. At the same time, we're going to steal your technology. And we're going to make better cars that in time will compete with your cars and destroy your market share. And then we say, thank you so much. Now you're pretty much obsolete in the Chinese market. And that's already happening. BYD, Chinese company, took over Tesla's deliveries in terms of sales in China in the year 23. And if you look at the market share of Tesla in the Chinese market, it's now below 10%. Tesla used to dominate about 50% of the market share in China not so long ago. And the same case can be seen in Apple's iPhone. Of course, when Apple wanted to do business with China and make a lot of money, the Chinese said, yep, you can come over here, you can use the cheap labor, but in time we're going to steal your technology, copy it, and make better phones. And now we see that Apple is falling behind in the market share for smartphones in China, and in particular behind Chinese domestic companies like Xiaomi and Huawei. And this is why it's important not to give China unlimited access to AI chips from NVIDIA, because they're going to be able to copy it and make better chips and cheaper ones, and then destroy NVIDIA's market share in the globe. But of course, in Silicon Valley, in Wall Street, all what they care about is money and right now. And even Jensen Huang, the CEO of NVIDIA, came out and said that Huawei's chip design, these are the AI chips by the Chinese company's Huawei, is extremely excellent, and warned that the Chinese will take over. It's just a matter of time. But this was his way to persuade the president, the Trump administration, that, hey, you got to allow us to sell chips in China, because if we don't do it, they're going to figure it out and then destroy us either way. So it's better to have them dependent on our chips rather than making their own. The truth is, it doesn't matter. If we don't allow NVIDIA's chips in China, it's going to take the Chinese longer to figure out making better and more efficient chips. If we allow NVIDIA's chips into China, it's going to take them shorter amount of time to figure it out. But the argument by Jensen Huang was, hey, look, the Chinese are already having access to these NVIDIA chips either way. We got the news just a few days ago that we charged 2 Chinese nationals for illegally shipping NVIDIA chips, AI chips, that is, to China. We know that China been setting up fake companies in Malaysia and Singapore, and they've been buying AI chips from NVIDIA either way. So at the end of the day, Jensen Huang, CEO of NVIDIA, schmoozed President Trump and convinced him that it is in our interest to open the Chinese market and sell NVIDIA chips, because without that, NVIDIA is going to take about a $50 billion hit. And that means that the stock of NVIDIA will go down. That means that Jensen Huang cannot dump more shares and buy mansions and islands and doomsday bunkers in Hawaii anymore. The Trump administration was convinced that, okay, yeah, he's making a good argument either way. They're getting access to the chips, so might as well just allow them to have that access. And Trump's idea was, but what if we bug the chips and we have a kill switch on them, or we can spy on the Chinese on what they're doing with these chips? Of course, Chinese intelligence immediately caught up to the fact and accused NVIDIA of collaborating with the CIA, collaborating with intelligence to bug the chips and compromise China. So NVIDIA immediately came out and said, no backdoors, no kill switches, no spyware. We don't want to do any of that, because if we do it, we lose reputation. It's not going to be just China that now not going to do business with us, but many other countries. So, Mr. Trump, thank you, but no. We want to be able to sell the chips to China, but without bugging them. This is not good for the Trump administration and for Trump personally, of course, because he wants a piece. He wants something in return. And I think right now we go back to what would it take for Trump to compromise all of his stance about, oh, China is a national security issue and all of that crap. All what it takes, this is what companies are now figuring out. All what it takes is you got to give the president a piece. You got to bribe the president, and then all avenues are allowed. There are no restrictions. There are no problems at all. And over the weekend, Trump was negotiating with the NVIDIA CEO Jensen Huang. And he said that he wants 20% cut out of NVIDIA revenue from China. Now, this is unprecedented. We've never seen a U.S. president who's demanding a U.S. company to pay a cut, 20%, out of the revenue from a certain country as a tax. In other words, shaking down a U.S. company for cash. To allow you to do business in China, I want 20%. And he called the H20 NVIDIA chips as obsolete. Well, if it is obsolete, then why are we fluffing the valuation of NVIDIA by $4.5 trillion right now? And how do we know that the 20% is going to go to the U.S. government and not going to go in the pocket of President Trump? At least a portion of it. Nobody knows. No accountability, no ways to have a watchdog to make sure that this revenue is going to go to the appropriate place. Not to mention, of course, that this is not free market capitalism. We don't tax U.S. companies, single them out to do business in anywhere, really. Not just in China. Of course, Huang and Trump managed to negotiate that rate to 15%, down from 20%. So now, every dollar that NVIDIA is going to make from China, 15% cut will go to the U.S. government. Or maybe the Trump presidential library. We don't know. This is the same playbook, by the way, that Tim Apple did last week. In the beginning of the year, Trump was barking loud, attacking Apple, that Apple should be moving its manufacturing from China, not to India, but to the U.S., that iPhones should be made here in the U.S. Of course, that added a lot of pressure on Apple's stock. It was down double digits for the year. It took CEO Tim Apple a little bit before he caught up to the fact that, oh, in the Trump playbook, you bark loud, you create a problem, you threaten, you cause damage. And then the other party, the subject party, has to come and bribe you, give you a gift, and then you back off. And Tim Apple showed up to the White House with a nice souvenir, some say worth about $1 million. He made a conference with Trump and said that Apple is going to invest we said $500 billion before. No, make that $600 billion in the U.S. We're going to invest all of that money in the U.S. All of that's baloney, of course. Never going to happen. They're just throwing a number because everybody now figured out how to play the Trump playbook. Just appease him. Give him a gift, a bribe, and throw a number. The largest, the better. 600 billion, a trillion. Oh, the EU is going to invest $1 trillion in the U.S. South Korea is going to invest $500 billion. Japan, $500 billion. We're never going to see a dime of that money. Or we're never going to see a dime of the alleged $600 billion investment by Apple here. Just go back and look at the promises from the first Trump administration. When Apple's supposed to build factories here, and once Trump was out of office, they moved all of these factories to Thailand. Anyhow, this is all it took for Trump to say, okay, Tim Apple, I don't need you to make iPhones in the USA right now. Forget about it. We're cool now. You gave me $1 million, you know, this nice souvenir right here. They say that the gold plate is worth $1 million. So instead of walking to the White House, to the Oval Office with a suitcase full of cash or an envelope, Tim Apple showed up with a souvenir. And this is how you do business in the era of Trump. He's going to bark. He's going to create a problem. All what you got to do is just go to the White House, hand him a bribe, and say, Mr. President, you're the greatest. And by the way, we're going to invest $1 trillion in the U.S. in the next 4 years. And then he's going to do whatever you want. Access to China. You want to sell F-35 to China for a 15% bribe? That's okay. You want to sell nuclear bombs to China? That's fine. So long as you pay the bribe. And the latest example, of course, is Intel. Last week, Trump comes out, accuses Intel CEO of being in the pockets of the Chinese government with ties to the CCP, demanding that the CEO of Intel, a private U.S. company, to resign. We've never seen U.S. presidents calling for private companies' CEOs to resign. But that was his take. That was the bark, creating the problem, giving you a little bit of pain. Of course, Intel figured out right away, we just got to use the same playbook that Tim Apple used, same playbook that Jensen Huang used. We got to grace the president with bribes, some cash, and some false promises. Today, the CEO of Intel was visiting the White House, and guess what happened next? After meeting with the CEO of Intel, Trump says that Mr. Tan, that's the CEO of Intel, will bring suggestions, quote unquote, next week. By suggestions, we mean a suitcase full of cash. And guess what happened? Trump flip-flopped on Intel CEO, who used to be a trader last week, a Chinese agent, and now calls him a success, days after demanding resignation. Does this sound like a civilized country to you, or a capitalist country? I don't think so anymore. And of course, Intel has no other choice. They figured out the way, good for them. All what they have to do is just to come out with false promises next week and say, oh, Intel is going to invest $60 billion in the U.S. By the way, what happened to the Ohio factories that Intel promised to build back in the Biden administration? They backed off because they're losing a lot of money and there is no demand for it anyways. So again, the playbook with Trump right now, make false promises. The bigger the numbers, the better. He knows it's bullshit. We know it's bullshit, but it doesn't matter. So long as we get the headline. Number 2, give him a personal bribe. 15%, a souvenir, an envelope full of cash, something. Donation to the presidential library, donation to the Trump PAC. You figure it out. At the end of the day, of course, Trump wants a piece of Intel. And he figures out that Intel is going to be sold to a Taiwanese company, by the way, TSMC. He wants that company to buy Intel, which used to be the crown jewel of U.S. chip design and manufacturing. He even wants Broadcom, in combination with Taiwan, to buy Intel. And Intel right now has a market cap, by the way, of about $90 billion. AVGO, Broadcom, has a market cap of about $1.5 trillion. Taiwan Semi has a valuation of about $1 trillion. They can come together and buy Intel. And this is why I say that as bad as Intel is, which is supposed to be a short in the market, you're supposed to short Intel. You can't do that. You actually have to buy it because sooner than later, Trump is going to get his piece. And in return, he's going to find a buyer that who's going to take over Intel. And he's going to get a piece out of that too. So why don't we get a piece out of that by being long Intel? That's the only choice you got in this golden age of corruption. And to be honest with you, if I was a lobbyist or if I was a consultant for any foreign government or a U.S. corporation or industry, I would say, folks, just walk to the White House and hand him a suitcase full of cash. $2 million in a suitcase, just like the Godfather sent Fredo in to bribe the president, and he's going to take it. And nobody's going to question it. Definitely his supporters are not going to question it. They're going to say, oh, see, he's a trade deal maker. He's smart. I mean, imagine if it was Obama or Biden or Clinton or anybody who was shaking down U.S. companies for percentage points and receiving souvenirs and cash and exchanging favors. We would have lost our minds. But now with the Trump administration, all of a sudden it's okay. It's just the way we do business now. So the survey for tonight, you let me know in the comment section below. Do you think that President Trump is a hoe? Do we have a hoe in the White House? You pay, you play. Let us know what you think in the comment section. Another survey I want to make is for the people who call themselves MAGA or conservatives, because I'm a conservative, at least from an economic perspective or fiscal perspective, socially liberal, fiscally conservative, economically conservative. And I hate to break it down for you, that this tariff policy is not part of conservative economics. It's not a Republican policy at all. It's actually a socialist policy. It's the kind of stuff that Bernie Sanders wanted to use. So I ask you again, what do you really support? Are you really a fiscal conservative because You supported the big beautiful bill which added $5 trillion to the debt ceiling. Are you economically conservative that bribery and access to China should be restricted? Because right now you're supporting all of that. You're supporting easy access to China so long as you pay the fee to the White House. And soon enough, I promise you, with all of these tariffs and all of these policies, but you see what's going on in the grocery store. The prices are out of control and inflation is going to continue to go higher regardless of the manipulation. Guess what's going to happen next? President Trump is going to go full communist and begin to blame the companies for price gouging and begin to implement price controls. What are you going to do then? How's that going to jive with your ass? Are you going to support communism then? Let's make communism great again, brah. Then you're in a cult. You don't really believe in conservatism. You don't believe in nothing. I hate to break it down for you. In this channel, we've been consistent. When the Biden administration failed to control inflation initially, they tried to blame the corporations for price gouging. And we told you, looking at the corporate earnings, without price gouging, the companies will fall apart. And he's being full communist right now, blaming the companies for his failure. And Trump soon enough is going to do the same thing. And by the way, price controls don't work at all. I mean, go back to the Nixon administration. To tackle inflation, they did the price controls, and that backfired at the end of the day. We've seen inflation actually going higher. That's going to happen. And it might happen as soon as tomorrow, by the way. We have the CPI coming out. It's going to begin to show reflections of the tariff policy. Of course, there are other reflections that we could see, such as the weakness in the housing market, since we have a stagflation phenomenon in this economy right now. But at the end of the day, what matters for the consumer, I mean, we have a lot of concerns, as this headline suggests, after the firing of the BLS commissioner. The BLS also produces the CPI, the inflation reports. So there is a little bit of concern about the reliability of the data, that it might be cooked. I mean, we already knew that the government data cannot be trusted. Now, we have zero trust in them at all, because they're going to be cooked for political reasons. But at the end of the day, folks, cooking or no cooking, you're not going to be able to change the realities in the ground. And here's another survey for you that I want you to go to the comment section and let me know about. How do you feel about the grocery store prices when you go shopping? Because I think it's shocking. You grab a few items, you're going out with a $200 bill. You haven't even gotten the essentials yet. And you see the frustration in the polls. You see the frustration coming out all over the place. And at the end of the day, even if the CPI comes out cooked, you're not going to be able to silence the feedback from everybody in the country who says, hey, the grocery prices are insane. So at the end of the day, Trump is going to come out and blame all of these shops, the grocery shops, for price gouging and implement price controls. Let's see if we're going to support that. Anyhow, folks, if you happen to be a member of the channel, we produced a video last night looking at earnings reviews. And we're going to extract the macro themes out of these earnings. Since the government data is not reliable, I'm showing you the corporate data, what the companies are actually saying in the ground. Are they increasing prices or not? What macro themes do we see in this economy? It's really fascinating, so go ahead and check out that video. But now, before we segue to the market information, I want to talk about the morning brief a little bit, and here it is. Good morning. Few things I'm watching today. Number one, the VIX, the 2 hours time frame shows a bullish MACD cross. We've been awaiting for this since Friday. It is due to happen, just a matter of when. And this is the chart that I gave you. Notice the incoming cross in the MACD in the 2 hours where we see a change in momentum from bearish to bullish. The red columns become green columns. That is an indicator of the volatility. The VIX is about to move higher, and that's not going to be good for the indices. We're probably going to see a pullback. Here's your update. So today we see a pop in the VIX, and we finally got the cross. And we see these green impressions in the histogram indicating the beginning of the bullish momentum in the VIX. Now, you have two things that you can do based on this information. Number one, of course, you got to hedge your portfolio, because the VIX, when it goes down, the price of hedging insurance is the cheapest. But if it begins to pop higher, specifically above the level of 20, then hedging becomes more and more expensive. Number two, if you want to speculate against the market and bet against it for, let's say, a trade all the way to September, you got some supporting evidence from the VIX. Now, back to the morning brief, we talked about the ticker USAR. In my second observation, this is a rare earth metals kind of stock. It's really an exploration company. It's not really producing at the moment, but since we see investment from the government, it could be a subject to that investment at some point. So I said I'm confident that the name is breaking out and should perform well when earnings are released, but there is no harm in buying weekly puts at the price you desire to exit at, just in case the report causes a big drop in reaction. This is the chart that I gave you. We see a bullish breakout. We own the stock, but what if it crashes after earnings? If you bought the 15 puts, 16 puts, 14 puts, whatever works with your entry point, there's no harm just in case it flushes down after earnings. Now, I checked out the report, and after the bell, I'm looking at the pricing point, and I'm not seeing a big drop in USAR. I'm actually seeing it rebounding. So far, so good. We go back to the morning brief. ALB, this is another miner. I play mostly in lithium that we've been eyeing for a while. Of course, it performs pretty good if you're betting that the dollar is going to go down. So instead of eyeing a position, a stock position that is, if we close above 80.88, I'll be adding shares of the name to the portfolio. This is the weekly chart that I gave you in the morning. If we close above by the end of the week, MAV is buying ALB. Here's the update for you. We closed just a touch below. We will see how we're going to close before the end of the week. And of course, we have the CPI, the PPI, with possibility of fluctuation in the dollar, which could impact this name negatively or positively. So we're going to wait till the end of the week, and if we close above 80.88, I'll be buying shares of ALB. Back to the morning brief. Number 4, AMD. And I say with the company paying 15% of its revenue from China to the government. In a bad earnings report, I expect the stock to trade badly. If AMD keeps trading below 170, I believe it will form a wave pattern that will eventually lead the stock back to 150. And this is the chart that I gave you. You can see the wave pattern where we see lower lows and lower highs. If we continue to trade below 170 without closing at a higher high, the risk becomes that AMD is going to flush down, specifically when you factor in the bad earnings report that we got last week. I mean, they're going to pay 15% of their revenue from China to the U.S. government. They're not even making profits right now. So that's not pretty good. Maybe NVIDIA has cushion to pay the 15%, but AMD doesn't. And here's the update for you. You see that AMD attempted to make a higher high, but at the end of the day, it managed to close negative for the day. So if this pattern continues and we don't see NVIDIA making a higher high, by the end of this week, I would say the assumption will be that we're going to go back to a bad 150. I have it at 149.34, but 150 will be the number I'm eyeing. We go back to the morning brief. Number 5, TKO. I said with Disney eyeing a stake in the WWE, I really don't understand the appeal of the WWE right now. Back in the day, it used to be entertaining. Now, I don't know, but it seems to be more popular than ever. Good for them. And with Paramount now streaming or buying the right to stream UFC fights, I think as this chart maintains a higher low weekly pattern, it may be able to trade back at the highs again. This is the chart that I gave you for TKO, which owns the WWE and the UFC. You can see the pattern of support of higher lows on the weekly chart. And I said we might eye a trade back to the highs at about 180. Well, guess what happened today? We got a massive pop all the way to 180 to the penny. So if you bought TKO shares or calls throughout the day, you did pretty good. Congratulations. Now, the last one I want to give you an update on is INTC Intel. We talked about this in the morning brief last week, dated August 7, 2025. Look, I said pretty much in a nutshell, you can pause this and read it for your own, but I said that I think, despite the bad news that Trump is going to call the CEO to resign, I think at the end of the day, he wants to manipulate Intel higher. He wants to find a buyer, clear the way to find somebody who buys Intel. So I would take the dip as an opportunity to buy, but I'm going to do it safely. And the way I'm going to do it is to sell the 20 puts and then to buy the 20 calls for the expiration date of September. And we did this trade live in the stream on August 7th, and it cost me nothing. Zero. And here's the updated chart for Intel. You see that we're trading above 20. So far, so good. If you sold the 20 puts, you bought the 20 calls, you're doing pretty good. Of course, we'd love to see it close above the 200 days moving average that you see in orange right here, because that's going to seal the deal that Intel is heading higher. We do have a cut loss on it. If we trade below 19, then you got to exit the trade. There's a problem with Intel, and despite all of the pumping, it's not going to work out. But right now, we give it a shot. We're not paying anything for the trade. We sold the 20 puts, we bought the 20 calls. Either way, you can exercise and get a stake in Intel. Comes the expiration date in September. At that point, you have a better point of assessment, whether it's worth buying the shares or not. So for now, we'll keep it as it is, but at least you know the point of confirmation, closing above the 200 days moving average, or the point of cut loss, closing below 19. This wraps up this portion of the coverage in this program. Now we segue to the market information. Let's begin with the closing of the indices today, and here we go. The diamonds in the red, down by 252 points, or a loss of 0.45%. Even the tech-heavy NASDAQ today was down in the red, losing 64.62 points, or a loss of 0.3%. S&P also on the downside, losing 16 points, or a loss of 0.25 percentage point. Your leading indicator, the Russell 2000, is also in the red, but be it a touch, down 0.05 points, or a loss of 0.02%. Looking at the sectors, we see pretty much the majority of the market in the red, led by energy, real estate, technology, materials, utilities. The only sector closing positive, at least in a significant way, is consumer defensives. But we'll look at the map in a minute. A lot of these names were actually in the red today. So weak day to say the least. You can see it here in the breadth, the NYSE 40% advancing, 58% of the volume declining. In the NASDAQ, 43% advancing, 54% declining. Close enough to the 50 points where the market maker wins. When we say that, by the way, it means that anybody who bought calls or puts in the prior day, if the market closes with a breadth closer to 50-50, the majority of the bets, calls, or puts end up losing money. And of course, the market maker collects all of that premium. Keep that in mind. Now, when we look at the heat map, majority in the red, but we see certain things that we can extract for today's session. Number one, of course, is the weakness that we see in software. So we talked about this. At the end of the day, any technological bubble, in this case, the AI bubble, new innovations, at least new implementations of AI, because AI been with us since the 1970s. But you're going to begin to see disruption. And by the way, this is how the bubble dies from within. And right now, the stage of disruption is, if you remember the cloud kings, that was the bubble back in the 20-teens. These companies are now being disrupted by AI. So you see software pain across the board. And now investors are beginning to question whether these software companies will actually exist or not in the next 5 years plus. The other theme that stands out is in healthcare. So we see a rebound in Eli Lilly, but NVO going down. This is the Ozempic mania, which, by the way, also popping as we speak. Why? Because there is disruption. There is competition. NVO comes with Ozempic, Wegovy, then Eli Lilly comes with Mounjaro. Now we got competition. And you cannot maintain the pricing advantage for a long time. Not to mention, of course, that we have disruption. And now the disruption in the Ozempic mania, Ozempic bubble is who's going to make the pill. Injections are good, but it keeps at least a big portion of the market not accessible because a lot of folks don't like the injections every day or on weekly basis. They'd like to have a pill. And we got the results. NVO's pill still not proven. Eli Lilly's pill, we got the earnings report and they did not like the results. We're talking about the market. The investors did not like the results. I think, to be honest with you, that the market's expectations of the performance of the pill is a little bit unrealistic. It's never going to match the results from the injections. So the market is setting a high bar and it's not meeting it. So we see Eli Lilly going down big after earnings. We've seen, of course, NVO crashing. And now the talk is if we have any benefactor from this dynamic, it would be Vikings Therapeutics, because they're developing a pill right now and it might beat Eli Lilly or NVO's pill. So that's the opportunity right now. Of course, that's an assumption. We don't know if it's going to succeed or not. But if it does, here we got a bubble that is popping because of competition, number one, and because of disruption, number two. And the same thing is going to happen in the AI bubble, by the way. Anyhow, back to the map, we look at the industrials. You see rebounds in the waste names such as Waste Management, RSG. These companies are strong and they're reliable. They can withstand a lot of economic conditions, among them recessions. You're not going to tell the garbage people not to show up and pick up the trash. You're going to have to pay the fees, so they have reliability against recession. The other thing that stands out is Caterpillar. Caterpillar, we did the earnings reviews last night. It just doesn't look pretty good. So we have to wait and see if Deere is going to do better. Deere is coming out this week. Now you go to metals, and I would say that the dips that we got in the agricultural stuff, such as Corteva, Nutrien, Mosaic, all of these are opportunities to buy the dip in. Besides that, we go back to the map. Nothing really stands out today. It's a weaker day, but we need to see how the CPI and the PPI will shake out the map in the next couple of days. Moving on to commodities. We're not going to waste a lot of time here. We're going to look at the notable movers because we haven't seen a lot of moves today. But we got a move in gold and silver to the downside. What's up with that? My 2 cents, anticipation that the CPI could be hotter and that could lead to the dollar to go higher. So a little bit of hedging showing up in gold and silver, but if the CPI is not as hot as feared, at least, and the dollar reacts in a stable fashion, you're probably going to see money flowing back into gold and silver. But the notable mover today in metals was lithium. Now, these are the prices for the Chinese market, but this is the main tradable lithium commodity. We see a pop of about 3.5% today because we got the headline that the largest EV battery maker closed its lithium mine in China. So now we have a shortage in lithium. And we see lithium stocks going up. The other pricing point that stands out here in commodities is what we've seen today in softs. So you see orange juice up about a little over 4.5%. Big rebound today. We see coffee up about 3.25% today. This is, of course, in relation to the tariffs against Brazil. Brazil is a big exporter of orange juice and coffee. Right now, from what we know, orange juice is exempt, but coffee is not. But there's a lot of ambiguity with the details. So the market was assuming that we're going to see a taco in the Brazilian tariffs. And this is why we haven't seen a price surge in coffee or OJ. Maybe the market right now is beginning to change its mind that there is no taco when it comes to the Brazilian tariffs. And that's going to lead to higher prices in OJ and coffee. Moving on to the big casino options, what do we see here? The volume is down. It's Monday. A lot of folks are not ready to trade yet. We want to wait for the CPI and the PPI before we make up our mind, but few things stand out. When we look at the IV rank and the IV percentile, we see that Tesla is really cheap. About 3% in the IV rank, about 2% in the IV percentile. This is the lowest implied volatility going back a year almost. So if you want to bet on Tesla up or down, the options premiums are really cheap at this point. They might not remain cheap if the VIX moves higher and we see, let's say, more of a volatile move in Tesla. The other thing that stands out for me is the ticker BMNR. Now, we talked about this last week. We've seen an unusual activity where somebody was betting against this name millions and millions of dollars. And I disagreed. I said, the chart looks to me that it's going to break out, not break down. Well, guess what? Today we got a big breakout. The name was up over 20% in the day, but it closed short of the highs. And it makes sense because the IV rank is now 100%, the highest implied volatility, and the IV percentile about 93%. So this is the highest volatility going back a year. Of course, the name is new. So this is the highest volatility ever, meaning that the options premiums are the most expensive ever for this name, which also an indicator that we could see a dip, a pullback. Maybe we got some of it today. Maybe there's a little bit tomorrow. We see a dip in this name to cool off the implied volatility, lower the prices of premiums. Then we'll see if the narrative is still intact. You might see more buyers of calls and we see another pop higher. Another one that stands out is the ticker AI. Today the name was down over 25.5%. But look at the IV percentile, about 94%, which means that the implied volatility popped significantly higher in the short term. And that could be an indicator that we could see a short-term / oversold rebound before the decline continues. Now I want to check out on the options market data because we got expiration date options expirations this Friday, the 15th. It's going to be a big expiration date. And we expect a movement here in the SPY, the S&P 500. So let's do the gamma study. And you got your call wall at 640. You got your put wall at 625. But right now, we're beyond the point of the gamma flip, which is sitting right now at 637.49. So we're trading below that number. What does that mean? If we continue to trade below, we expect more declines to come in the SPY. Why is that the case? Because the market maker is going to begin to dump shares of the SPY. How far can we go? You gotta look at two things. You got the gamma exposure, so you have the call exposure in blue, you have the put exposure in yellow. You can see that the put exposure for this week is way bigger than the calls. And right now, the market maker managed to close pretty much at the highest point of the put gamma exposure. So it could theoretically stop here. But then the next thing you gotta look at is the open interest. When we do that, we see that the highest open interest is at the 625 puts, which means that if we continue to trade below the point of the gamma flip, you're probably going to see the market maker dumping the SPY all the way down to the point of the highest open interest, and that would be the 625. Furthermore, when we study the options volatility skew, this is a negative volatility skew, meaning that the implied volatility for puts out of the money are higher than the implied volatility of out of the money calls, suggesting that we're probably going to head down. Of course, the data changes every day, but this is what we have right now, and the suggestion is that we're probably going to head down in the S&P 500 by the end of the week. Now let's do some of the unusual activities, beginning with the bullish ones. How about the ticker LITE, Light? This is for a company called Lumentum. Stock been on a run and somebody expects more gains to come. Now, I got to caution you that we have earnings coming out, so they're betting on earnings that it's going to come out pretty good. And they bought the 130 calls. They sold the 140 for the expiration date of August 15th. Right now, we're trading at about 115 in the name. And they spent about $675,000. Now, I got to disagree with this bet right here because I think the bar is way too high. That report has to be really, really impressive because you look at the weekly chart. Yes, yes, we have a cup and handle pattern, but it's really excessive right now. It's way, way overbought. If you look at the MACD, look at the RSI, I'm not sure that this is going to play out, but good luck to the trader who placed this bet. Then we got Meta. Meta came out with a really decent report, so if there is any ambiguity or if there is any uncertainty in the market, the money has to flow somewhere where we still see decent growth in a large cap technology company. We got no other choice besides Microsoft and Meta. And here we see Meta, somebody betting 775 calls, the expiration date September 12th. 2025. Right now, Meta is trading at about 765, so not so far out of the money. And they spent about $4.5 million on the bet. Now let's do the bearish ones. How about the SPX, the S&P 500? Somebody bought the 6,250 puts with the expiration date of the last day of the year, New Year's Eve, December 31st, 2025. Mind you, right now the SPX is trading at about 6,390. They're betting on 6,250 and below by that expiration date, spending about a little over $13.25 million. We got another one for you here for the ticker ZF. This is the 5-year T-Note futures. The contract for December 25, meaning if they're betting here in the case of puts, of course, they're betting that the 5-year bond, or we call it note actually, it will go down, which means the 5-year yield is going to go higher. We've seen this repeatedly, not just in the 5-year, but across the curve. In the 2-year and the 10-year, of course, after the jobs numbers that we got lately, we've seen a crush in bond yields, and the prices went higher. Now we see traders saying, wait a minute here, we haven't eliminated the inflation risk yet, and maybe the CPI will show that that risk is still alive. And in return, what that's going to do is move bond yields higher again and push the prices down. That's what they're betting on. So here, they bought the 108.5 puts for the expiration date November 21st, 2025, spending about $3 million on that bet. And then we got the ticker GOOGL, Google. The name is trading at about 201 right now. Somebody bought the 200 puts for the expiration date August 29th, 2025. It looks like a hedge to me for somebody who entered a new position in Google. So they're buying sort of a married put, which is pretty much in the money or really close to the money put. Just in case their timing is not pretty good, they buy Google and next thing you know, it goes down 5-6%. They can exit with minimal damage. All in all, spending about a little over $2.5 million on this hedge, in my opinion at least. The last one I got for you is the KRE, Regional Banks ETF. In this case, somebody bought the 59 and the 56 puts for the expiration date October 17th, 2025, spending about a little over $2 million. This is close to the money because right now the KRE is trading at about 59. And if we look at the chart, this is the daily chart for the KRE. Below the moving averages, the 50 in blue and the 200 in orange, maybe forming a bear flag pattern. So maybe the trader is onto something here that we're going to go down in the KRE. I would say that is dependent on the inflation data. If inflation data come out hotter than expectations, and we see bond yields heading higher, that's not good for the held to maturity assets in regional banks. That could cause the KRE to go down. Let's do some charts, and we begin with the E-mini futures, the S&P 500 daily chart. What can we see here? We're waiting and waiting for a lower high. So we got this high right here. We're waiting for a lower high. This was not it. This is not it. Is this right here it? And we have finally a lower high. And if we do, I would say we go down all the way to revisit the previous lows right here at 6,240. That would be in or around, by the way, the 50 days moving average. Now, I reiterate that if you look at the RSI, the relative strength indicator, usually 9 times out of 10, when we get to overbought conditions, as you see right here, as we've seen right here, and again right here in 23, you can go back in the chart as long as you'd like. The likelihood is that we, despite the rebounds that we get, we're going to get to oversold conditions. As you can see here, going back down here, extreme highs. Despite the rebounds, we went down to extreme lows. Again, when we got to overbought right here in 23, we went down to oversold. So it is just a matter of time before we see the RSI heading back to oversold, and that suggests that we have a correction really close by. It could happen because of the seasonality. August, September, not pretty good months for the stock market. Now, if we look at the SPY, an hourly chart, what can we see here? Is this a bearish engulfing candle? Can we have a mama bear right here? Maybe. If you look at the MACD indicator, it is rolling over, so you got bullish momentum here in the beginning of August, moving higher, and now we see this momentum rolling over. It was a false breakout right here. This one could be stronger. We could see a correction. If that is the case, I would say we lose 635. Maybe we can find support at 630. If that doesn't work out, then we go down to the maximum pain, or the highest number of open interest by the end of the week, and that was the 625 puts. So we can go down to 625, but one step at a time, because it does depend on the biggest names. The biggest weighted names, of course, how can we forget about Apple? Apple exploded higher after the bribe by Tim Apple. Good for him, adding about $600 billion worth of value. I would say not bad as a business deal. The bribe the president with $1 million and promise of Fugazi $600 billion, and then you get a $600 billion actual increase in the market value for a company. That's not a bad deal. But here, technically speaking, if we stay above the 200 days moving average, that's going to be bullish for Apple. So we might see a pullback. It's a little bit excessive here in the indicators that it may be overbought. It may pull back. If it does pull back, that's okay. All the way to the 200, that's okay. If we close below the 200, then we got a problem. But a pullback in Apple all the way down to the 200 days moving average could be enough to pull back the SPY down to 630. But that depends on the other giant here, which is NVIDIA. We call it now the big kahuna because it is way bigger than Apple. And as NVIDIA goes, so will the market. And right now we have a pattern of higher highs and higher lows. Recently we got this range right here. We're stuck, so we don't have lower highs yet. But what if we begin to head down, retest this support in or around, let's say 174, and then we break below? Then yes, we have probably a double top or a lower high, depending on how long it's going to take for that to happen. And then we begin to create a series of lower lows. Now, as I said before, I do not expect a big correction in NVIDIA before this report right here. I think we'll see some profit taking, some de-risking before this report comes out, but then it's up to this report to decide whether NVIDIA went way ahead of itself or is it underpriced at this point. This report is going to come out on Wednesday the 27th. The Dixie, the dollar index, we talked about a bear flag, we lost support, now we're above it again, the sloping line right here. It depends on the CPI and the PPI, by the way, the inflation data. If it comes out hot, we're probably going to see the dollar heading higher, indicating that the Fed is probably not going to be as loose as the market expects, cutting three rate cuts this year alone, which kind of excessive in my opinion. I think maybe we'll get away with one, but 3, I think it's wishful thinking. But if we get a hotter inflation data, those odds of 3 rate cuts will be reduced maybe to 2 or 1, and that's going to lead the dollar to go higher. Now, if we get a confirmation with a weaker CPI data, we get a confirmation of the 3 rate cuts for the year, maybe we'll see the dollar heading down. So for now, we'll give the dollar the benefit of the doubt that maybe it has a pattern of high or low. This is a low, higher low. It might head up because of the inflation data. Now, if the dollar goes higher, not going to be pretty good for the old man gold. So we're looking at gold futures right here. We got resistance 1, 2, 3, 4, 5. Couldn't make it. Does that mean that gold is done? No. But of course, if the dollar heads higher, gold is going to pull back. I'm not worried about gold, to be honest with you, unless we go down to 3,250. Then I'm going to begin to hedge. But absent of that, I'm comfortable with my position in gold. Right now, I see consolidation. Any pullbacks, I'll be adding more to that position. So I'm not worried about gold. I expect maybe a small pullback if the dollar pops. Now, what about crude oil? If you look at crude oil, it's going to trade along with the dollar, by the way. So if the dollar pops, you'll see crude oil going higher. If you see the dollar flushing down because we got a weaker CPI, you're probably going to see crude oil getting down too along with it. Now, some would argue in the longer run, isn't this an inverse head and shoulder math? Perhaps. But right now, we're trading below the 200 days moving average. So crude oil is more negative than it is positive. But we have to wait and see what the dollar is going to do based on the inflation data. If it pushes its way higher, my expectations are that we're probably going to see crude oil also heading higher. Now, don't forget about the meeting with Putin in Alaska. The market is going to be soft or expect a deal of some sort, perhaps, and that could add more downward pressure on crude oil. But if we see that we got hotter CPI, PPI data, and the dollar heads higher, and the meeting in Alaska doesn't come out with anything meaningful, you're probably going to see a surge higher in crude oil all the way back to 70. Another important chart to look at in tomorrow's session, all the way to the end of the week really, would be the 30-year bond yield. Right now, we're looking at the weekly chart. It looks like a cup and handle. We still see the resistance here at around 5%. The top was around 23, and then we had a really hard time to break above. With that being said, we have a series of higher lows, which means the possibility for break above 5% is still on the table. And higher inflation data could do that. And if we break above 5% again, that's going to be the catalyst for the market to pull back and volatility to come back in the picture. Keep that in mind. So it all depends on the CPI, PPI. And the reaction to this chart right here is going to be significant. The souffle Tesla 2 hours chart, what can we see here? We're above what used to be resistance, now support, 333. So long as we trade above, there's no reason to place some puts on Tesla. If you have calls, maybe you want to book some profits because you're a little bit on the excessive side on the 2 hours RSI. You might begin to pull back. But I would say that you're only going to buy puts or flip to puts if we lose 333, then the possibility of going down to the next support of 313 becomes a possibility. And lastly, BTC. Never lost the 50 days moving average, back at the highs again. I would say this is going to be depending on the dollar. If the dollar pops higher because of a hotter CPI, we're probably going to see Bitcoin going down to 116,000. Maybe all the way back to the 50 days moving average. If we see the dollar flushing down because of a weaker CPI, I think that Bitcoin is going to make it above 120,000. At that point, you have a breakout and you're probably going to see a big surge. So you probably want to be involved one way or the other. Via ETFs, via actual Bitcoin, you choose your play. We'll wait and see what's going to happen tomorrow. Moving on to the conclusion of this video, what do we have on the economic calendar tomorrow, which happens to be Tuesday the 12th. Big day because we got the NFIB Small Business Optimism Index, always important to look at because the tariffs impact small and medium businesses more than the large ones. But the main event of the day, we have the CPI, this is the inflation data. All eyes will be in the CPI and whether the number is going to be cooked, non-cooked, reaction by the White House, all of that is important. On the earnings calendar, we have a bunch of important names this week. Beginning with Alibaba, Cisco, AMAT, you got Deere, we have Palo Alto, C Limited. We have also names, maybe pulse on the lower income consumer in Ross Stores, the ticker ROST. So we have a lot to look at this week. Why don't we take a rest right now, call it a show, and come back and talk to you guys in tomorrow's episode. But folks, before we wrap up, if you found the show informative, please return the favor by pressing the like button. Subscribe to the channel. Leave us a nice comment in the section below in the comments. And better yet, consider joining us as a Maverick member either here on YouTube or Patreon to access the daily shows with no restrictions and much more. But with that, folks, this is all I got for you for tonight. Thank you for listening. Thank you for watching. Appreciate and love all of you. I'll be talking to you again tomorrow. Good night.
You want to count it? Mikey, what the hell's going on anyway? I'm totally in the dark.
My family's making an investment in Havana.
This is a little gift.